Hi, Thomas Wood with MicroQuant here. Once again, taking a look at the Value Charts live trading room trades of the day for March 7th, 2013. We were up just slightly for the day. It was a pretty slow day. We didn't have much going on. However, we did have a few good trades. I'm just going to point out a couple of those. We also had a couple losing trades as well. So it really just depended on which trades you took, which trades you followed through with. The first one I'll point out is a short, or a couple shorts we had in soy. The first one was off of a bearish divergence here, where we were moderately overvalued, higher high prices, and a lower high indicator. If you come down and look at our momentum, we had a much lower high here. That ended up selling off and giving you the ability to take out around 9 cents, 8 or 9 cents a bushel. The second short we had was the same thing. It was another bearish divergence, higher high prices, moderately overvalued, and a lower high on our MQ momentum there as well. So we had another short there, and that gave you the ability to take out around 12 cents to the downside. So those were pretty decent trades, not bad if you held them down to the bottom. This is a great example of when you can use value range trading. When the market's basically sideways for the day, however, you have a lot of volatility without it really going anywhere. For example, here you see we had price swings of 10 to 15 cents at a time. Well, if you take your value charts and you adjust them to be a little bit longer or to be a little bit shorter, depending on how choppy it is, you can do some great value range trading, which is where you'd go long at undervalued, which are these lower yellow price bar segments, and then go short at overvalued at the upper yellow price bar segments, and then again long undervalued, and then you cover as soon as it hits overvalued. That's a great way to trade in choppy sideways markets like this, like we've seen today. Now, the next trade I'll point out and talk about is RBOB. We had a long and then a reversing short in RBOB. We had a long off of a hourly bullish divergence where we came down lower low prices and a higher low indicator compared to the previous low. And then we had a reversing short because we had higher prices and a lower high indicator. And that gave you the ability to take out around $1,000 to the upside and then another $700 or $800 back down to the downside per contract. So that wasn't a bad trade either. Like I said, we didn't have that many trades, as many as usual, because the markets were just pretty choppy today. Had a lot of news announcements that caused markets to spike and then to just stall out after they spiked. So we'll continue to follow these markets, continue to trade in the trading room. Look forward to seeing a lot of you tomorrow and tonight in Mark's workshop on creating automated trading strategies. And until next time, happy trading.